All right, let's jump right in. We're going to tackle one of the biggest, most important financial questions out there, life insurance. How much is actually enough? It's a question we all need an answer to, so let's get into it.
So let's just start with this. I want you to really think about it for a second. It's a tough question for sure, but it's the whole reason we're here. What if your family's main source of income just disappeared overnight?
You know, that one question gets right to the heart of the problem, doesn't it? It's about the sheer scale of the financial need that would pop up. And let's be honest, the number can be, well, pretty daunting.
For a lot of families, the number we're talking about could look something like this. Yeah, over $1.5 million. Now, seeing a number like that, it can be a real shock to the system. I totally get it. It just feels huge, right? Almost not even real. So you might be wondering, how in the world do you get to a number that big? Well, it's definitely not just pulled out of thin air. It's built from all the real-life stuff, you know? You've got the mortgage that still needs to be paid off, any other debts like car loans or credit cards. Then you have to replace years and years of lost income. And of course, a big one for many, funding your kids' education. Suddenly, when you start adding all that up, that giant number starts to make a whole lot more sense. And I know what you're probably thinking right now. A number that big must mean the insurance policy is going to be super expensive, right? It feels completely overwhelming. But listen, the point of this isn't to scare you, not at all. It's actually the opposite. We're here to bring some clarity and show you that there are really smart, structured ways to figure this all out. Okay, so where do we even begin with all this? Well, the most common starting point is to take a basic first step. Think of it like getting a quick estimate just to get you in the ballpark. A lot of people use something called the D.I.M.E plus method. It's a pretty handy acronym. It stands for debts, income replacement, mortgage, and education. It's a really common way to just get a baseline number. You can think of it like a quick back-of-the-napkin sketch to cover your biggest, most immediate needs. But that leads us to a really, really important question. Is that quick sketch enough? I mean, does a basic estimate like that really give you the whole story? The full picture you need to truly protect your family's future? And the honest answer is, not quite. To get the real story, you've got to move beyond that quick sketch. You need what's more like a comprehensive snapshot of your entire financial world. And this right here really shows you the difference in the two approaches. On one hand, you have the D.I.M.E method, which is, a decent tool for plugging the most obvious, immediate gaps. But on the other hand, you have a financial needs analysis, an F&A, and that is designed for something much, much bigger. We're talking true, comprehensive, long-term planning. So what makes an F&A so much more powerful? Well, it's because it goes so much deeper. It looks way beyond just your debts and what you need to replace your income. It starts digging into all the important financial details that a basic estimate just completely misses. So what are we talking about here? Well, an F&A actually looks at your assets. The money you already have in savings or investments that can help out. It looks at all your liabilities, your total net worth, your cash flow. It even considers your personal comfort level with financial risk. The key takeaway is this. It considers what you already have, not just what you'll owe. And honestly, this is the whole point. The source material we're looking at puts it perfectly, saying only an F&A can help to give a true overall financial snapshot. And that right there, that's the difference between just guessing and actually knowing you're protected. Okay, so what does all this mean for you, personally? How do you actually go from that simple estimate to a solid, reliable financial blueprint? Well, let's map out the path forward. The process is actually super logical when you break it down. Step 1? Sure, start by assessing your basic needs. That quick D.I.M.E plus sketch is a totally fine place to start the conversation. But, and this is the most important part, before you make a single decision, you move to Step 2, completing a comprehensive financial needs analysis. And only then, once you have that complete picture, do you move to Step 3 and purchase the products that truly fit your situation. You see, the crucial takeaway here is that the goal isn't just to get a life insurance policy. It's to get the right policy for the right reasons based on a complete plan. It's all about making that shift from a rough guess to a detailed, totally reliable strategy. And that leaves us with one last, really important question that I want you to think about. When it comes to your family's financial security, are you working off a rough sketch right now, or do you have a detailed blueprint? Thanks so much for hanging out with me today.